Hey, this one was from a question last night in terms of the short time frame channel. So I'm just going to cover this really quick. I'm going to do this as fast as I can, right? So there's not really much in terms of education here. It's just really covering where we are, from back when. So if you look back at April last year, I done a bit of a sequence in my profile back to back of where we were on the weeklies and the monthly time frames on the Forex pairs predominantly. Okay, so in my profile, you'll see this. We're going to start off with GBP, JPY. So first things first, 11th of April last year. Now, the idea was that we'd actually reached a three level. There was a massive liquidity pool sitting around there. So the idea would now be that we kind of go down for a four, and then ultimately we'll be moving on up for a five. Okay, so although we haven't really gone down here, you can see what it's doing is the range bound within that liquid. And bear in mind that's April through a March there through to now. We've actually been pretty much range bound. Okay, so this is a very shallow four, ultimately accumulating 4 or 5. We clearly had a false bar, at this level. So I'd expect this to still be up quite high with this kind of range, right? So it's a very, very low, possibly, not even the 23%. So ultimately, there's still a lot of strength in that GBP over the yen right now. Okay, so that's the first one. That's GBP JPY. Now, I know this one is what I'm trading. This is what I've been looking at for a very long time. So again, pretty similar situation, and you've got to remember everything come to this, zero level, whether it was up or down, around COVID time, obviously 2020. Okay, so from the COVID 2020, having then the strength in Aussie dollar, ultimately up to a three, and then three down to four was ultimately what was being called, back last April, and we're still in that move as we stand right now. Okay, so if I do a little bit of work on this particular one, this is one, like I said, I'm a little bit more interested in. So in essence, all we see, and if you kind of flip between the two here, if you take the first move from the three down, you'd regard this as the A, then the B, and then ultimately the C. Okay, so if we do that, I'm going to zoom in on this one. If we do that, the first thing you're going to notice is the fib extension is going to be around that 11618 ABC, and therefore we tag that relatively nice. Then we've got clearly another A, B, C. This is making us the B. Okay, so we've got clear as day A, B, and now we're in that C. So if we look at the move down, we've got a 3 in there, we've got a 3 in there, a 335. So that's clearly a zigzag move down A, which means we've got a 3. Then we'd expect a 3. Then we likely to see a 5. Okay, so seeing a 5 in this doesn't necessarily mean that it has to be really deep. What we're looking for on this is now a 1, a 2, a 3. We could get a 4 and a 5, creating a triple bottom before ultimately we break that channel and up and off we go. Now, a couple of things to look out for. False bar on the stochastic. We've still got that down momentum. We're probably likely to see a wick fill before then coming back down. And that will just create, like I said, that triple bottom, in essence, an M pattern, as you see there. The M pattern then breakout. We probably see a break. This is going to be the 1. This will be the 2. Then we get a nice 3, 4, 5. And that will probably create the 1 of the bit. And I'm not saying this in terms of the levels, just hypothetically, the kind of run. So this will create then the 1. We get a deep pullback 2. Then we go off for 3. And then up, and on we go. Okay, so that's what I'm expecting on Aussie dollar. We're going to come down then into Euro JPY. So again, the 3 looked like it was already in. We had a false bar, so I would like to see this dropping down. We've gone again pretty much sideways, right? So that 3 clearly wasn't in at this point, so we would have probably seen the 1, the 2. This would have been potentially up then for the 3, yeah. So I think running extensions on this is what I'll do next. So 1, 2, and then up for the 3 on a weekly. So 3 down for 4. Again, pretty shallow looking at that. However, this is sideways. So let's check that on the chart. So Euro JPY on the weekly. Let's come into this. I'm going to go from the, I can't remember what I had as the first, the very sharp spike. So a 1 and a shallow 2. Okay, so we actually only hit the 1382 there. This does look to be the 4. So I think on this particular move, we again got very similar to the Aussie dollar. We've got an A, a B, and we still have the C potentially forming unless this has become the candidate for the C. And therefore, we're in the 1, 2, potentially up 3. So there's 2 possibilities on the Euro JPY. If it is this particular one, then we're more likely to say that this is in front of now, and the divergence from the March 2020 move has actually started, to work itself out on pairs like this. So yeah, keep an eye on this one. This one could actually be a little bit in front of Aussie dollar, but again, I wouldn't be surprised. Let me see what the daily's doing. Yeah, I wouldn't be surprised to see now a little bit of a shuffle. We might come up for liquidity and then ultimately come on back down, create another bottom. So I personally say, although it could be the 0-1 away from the 4, I think we're likely to see these triple bottoms. And, given these are monthly patterns, the triple bottoms just means, heavier accumulation longer term. So I think it's just more range bound, right now. We then got GBP, USD. I think the 3 was in. I wasn't a fan on this one based on the extensions. And obviously this is going back to April, so let's see where we moved. So I'm not sure if this one created, let's see what the high on that one was. High 4241, 4241. So this has actually become the 3. So I'll move that over there. And then ultimately what we're seeing right now is a move down, a move up, and then ultimately back down. So I think, judging on what we're going to see with the US dollar in terms of some more weakness, that will ultimately give GBP a bit of strength, and that will probably give us then the move up. Now, this is clearly a monthly rather than a weekly here. So you can see the monthly was pointing down. Let's see where we are on the monthly on the chart. Let's zoom a little bit out. Monthly on the chart. Yeah, so you can clearly see the monthly now has changed its opinion. We've gone from the overbought to now the oversold. Overbought there. We've now come down. This now is oversold, and then ultimately a move on up. So for me, I'd like to say on GBP USD that on the larger time frame, 4 is potentially done with, dropping down on the weekly. We've probably got again a similar situation. We're less likely to see a triple bottom on this one. It's more likely to be a double bottom. But in essence, if we look at this level, this was the high. So we've probably got some kind of 5-wave move, maybe this 3, 4, and 5, and therefore currently a B, maybe a C testing this as a top again. We might go a little bit higher for some liquidity, and then ultimately the drop down. But I think for me, this would be the kind of level, which means a wick fill, fake out, drop down, that will conform with the stochastic, and then ultimately we can start our move up 5. I don't think it's going to stay much longer around this level, which means, like I said, wick fill, fake out, down we go, and then up and off we off. So what's next? Sorry, this one's a bit more rushed. It's just there's not really that much to say. It's more of highlighting where everything is and why. And like I said, this goes back a full year in terms of the move. You can see we haven't been impulsive at all throughout this move. So clearly the 3 move was in, right? Now the 4 move is obviously a lot deeper, and we actually come down into that invalidation level. This is again on the weekly. So we've come down into the invalidation level, but we kind of didn't stay there. So I think the thing is for me, looking at this particular move, as I've mentioned in one of the last streams with Euro, I think this is just a bigger accumulation play in that game. Euro, much like Bitcoin, it's got a lot of eyes watching this, so it kind of plays around, it plays the game a lot more than some of the other pairs, only because of the sheer volume of retail getting into this. The main reason they're into this in terms of retail is that the spread is probably the lowest in terms of Forex. It's something that does move with a little bit of volatility. So it kind of becomes attractive to retail. And that's one of the reasons, the more professional you become, the less you'll want to trade euro because it's playing the games. And once you understand that, you know where to avoid it and why to avoid it. So, although we've come down to this invalidation level, I personally don't worry about that unless we completely close underneath it and we start, pointing down. Then it'll just be regarded as a reversal. But if you look at where we are with DXY, and I'll finish off with DXY, then ultimately we can see that this will give another little pump now. And again, given the sheer volume that's in this, as soon as they, and I'm talking, Composite Man, the big boys, as soon as they've accumulated enough here, they'll probably make this look like one more drop. That will give obviously retailer, oh, this is in a downtrend. And then at that point, it'll rally, beyond belief. This will probably be one of the most aggressive ones in terms of the Forex space. So flipping on Euro USD on the weekly, all I can see there is, again, what I've kind of explained throughout the last couple of weeks, months even now, is that we've had the A, the B, the C, and I think this little range is just giving us now the Wyckoff accumulation. This could have easily been the spring, and therefore a spring into invalidation is not enough really to hurt. We've got a bit of a false bar, so I think we're going to get one more like test down, but I think the test down is only going to be potentially the two, so that's definitely an option. Or we'll get one more move down in terms of the Wyckoff kind of retest of the 50% of the structure, and then ultimately move on up. So everything you can see is pretty much in the same situation, and this also goes for Bitcoin as well. So what else have we got? We've then got USD CAD. So USD CAD, this for me I wasn't a fan on the extension level on this one, so potentially a slightly deeper three before the move back. The stochastic was now looking for the move, but given that this was again a monthly stochastic, this could have easily given us one more dip down and then obviously a push back up for the four. So yeah, there was your dip down, and then ultimately the pushback for the four. So an A, a B, potentially the C there. I'll come into what we're looking at now on the stochastic on the charts itself. So three was in at this level low, 1st of June 2021. What was I looking at? CAD. So yeah, three was in, and then ultimately, if we look at this being the three, this then giving us potentially the one, two, three, four, five, maybe. That's the five. Then we're looking at maybe the A, the B, the C. So that would give us the A. That would give us the B. And this is the inverse. Obviously, this is the USD upside down. So in theory, we'd be looking for now a five. We've obviously got the A, so we've got the B, and now we're looking for again the C, which probably very likely, given the size of the accumulation in reverse, and I suppose this is distribution, but in essence, they'll be accumulating the short positions here, ready to take that for one more, spike down. We'll get the five, and then at that point, then I think the stock market and everything else will be kind of spent in terms of SPX and so on. And this is where I'll finish off with DXY. So we'll probably have this being the four. We might get some kind of UTAD up around this level, which will only be collecting liquidity basically at these levels before that drop down. And I think like Bitcoin in the inverse on the weekly time frame, we're probably likely to get a relatively shallow five. It's probably going to be, in the inverse of this double top. It'll probably create some kind of bottom. So I wouldn't have high expectations on the target for something like this. I'd probably come back down, create that bottom, and then we're likely to accumulate around there. before going 1, 2, 3 back up on the much bigger time frame. The last one I seen was the New Zealand dollar, so I'll flick on this New Zealand dollar. I think that was it. Oh, USD Swiss franc too. New Zealand dollar, the four wasn't completed yet, which was exactly the same as the move from Aussie dollar. These things actually move very, very close to each other. They are correlated beyond belief. New Zealand dollar, US dollar. So pretty similar. Looking at this, an A, a B coming down now for the C, and therefore the extension levels will probably be again very similar. We're likely to see another little push up, then a drop down. That creates then the bottom. That bottom giving us the platform to launch this up then for that bigger five. USD Swiss franc. Okay, so USD Swiss franc again, they're all pretty similar. This is the inverse, obviously the US dollar being first rather than the Swiss franc being in front, which means it's down rather than up. So this particular move, 3, 4, I think the 4 is still in. You can see we're not impulsive yet on the way to 5. We haven't broken the 4, so the 4 was already there. We've come, pretty much sideways, and therefore that's profit taking at its finest. So I think everything from that value area March, 2020 all the way to now, we've kept the same kind of cycles, all the way through this. So that's it now for that lot. What I'll do is I'll finish off with DXY. I'm going to flip over to the advanced get for the DXY. And what you can actually see with DXY is a pretty similar view, really. You've got the value area, back in March 2020. We've had a very shallow one. We've come back 2. We've come down 3. And therefore, we're at 4, right? So again, not really much to say. We've got a nice move on the oscillator. That's still playing itself out, which means there's plenty of space for a drop down because you'd like to see it come underneath the 0 level, potentially come underneath and then move back up. So expectations for me on this one is we're going to get a move down. I think the move down will push up the stock market. It'll push up Bitcoin. And this is one of the reasons personally I feel that the move in Bitcoin right now is not quite the B. And the reason for that is I think to get an aggressive move on DXY down should give some fuel to an aggressive move up on Bitcoin. And I think what people will then be seeing is that move will ultimately be into new all-time highs. That'll be the sucker punch. And then ultimately back down we go to create another bottom before the real move up. Okay, so, this is grand scale, kind of accumulation and distribution depending on the pair. But ultimately, this is manipulation of composite man playing retail. And you can see it when you break these charts down, like this. You then have, like I said, the A, the B. Probably if we run the extensions on that one again, you'll see the obvious kind of levels play themselves out. 1, 6, 8, it's almost too perfect. And I think then the general idea is that we'll consolidate the round, we'll play around, we might have another fake out, and then ultimately the drop down again. So this is where we are, all of the positions, all of the situations, and that's what I think we're seeing right now. So I'll actually post this in the short term, just to give the guys a little bit of an idea of, this is the type of thing we teach in terms of the educational content. This obviously is a bit of depth, and as you can see, this goes back a full nearly a year, April last year, in terms of what's played out. Nothing's changed across, several pairs that we've actually posted 10 months ago. So anyway, I hope you enjoyed this one. A little bit longer than I would have liked, but hopefully it covers this in depth. So enjoy your weekend, guys.